This couple in their early 40s was earning combined household income of $550,000, saving just over 10 grand a month, pretty solid clip, and their asset position was just a touch over $2 million. These guys came to us with a really solid platform, but they took their money game to the next level and put some moves in place that created an uplift for them of over 80 grand in just 12 months. I wanted to talk through this one so that you can learn the lessons from what they did. Now, these guys came to us suffering from one of the most common challenges or roadblocks that we see people facing, which is the fear of making a mistake. They'd worked hard to put themselves into what was a really good position for the age that they're in. They knew that they needed to do something, but they were paralyzed with the fear that they didn't want to do something dumb that ended up costing them a bunch of money. And as a result, they'd ended up just treading water financially. What they really wanted was complete financial security. So for them, that was having a house paid off and having enough investment income to allow them to live the lifestyle that they wanted. What we ended up doing for these guys and what they chose to do after going through the planning process was three main things. Firstly, they cranked up their super contributions. They'd just gone through a period where mum had gone through maternity leave. So she had a lot of these catch-up super contributions that she could put in. She'd return to work and her income was a lot higher. So she'd get big tax deductions and crank her super at the same time, so she maxed those ones out. At the same time, we paid down their mortgage debt from some cash that they had sitting in savings, but did it through a debt recycling strategy where they paid down their non-tax deductible home mortgage debt and at the same time then redrew the money out to invest into a share portfolio. But because they were redrawing for investment purposes, it makes the interest on that debt tax deductible, meaning they get some nice tax deductions over here. And at the same time, they're building a nice share portfolio that should grow well for them into the future. At the same time, they went and purchased an investment property around $1.1 million to create the growth that they wanted for the future. That created some further tax efficiencies because the property was negatively geared, but it also meant that they were using their property equity, which they already had. So they were getting a $1.1 million investment without putting in a single dollar of their own money. But of course, they did have to fund the cash flow of that purchase and the negative gearing cost over time. These guys were in a strong position when they came to us, but the upside was pretty dramatic. Their tax savings was $38,500 in the first 12 months, and that contributed to a total uplift for them of $80,000, or just over $80,000 from just the moves they made in a 12-month period.